Welcome to this week's Cattle Call. I'm Susan Littlefield on the Rural Radio Network. Before we even dive into the discussions, I give a big shout out and thank you to those folks who have continued to watch and share our program. All your shares and comments are so much appreciated. And if you do want to ask a question of Brad, don't hesitate to reach out as well. Well, no Armageddon this week or coming out of last week. Where are we moving forward? Perception versus reality. What is happening? I think that's going to be a big part of our discussion today, as we see some decent numbers moving through the trade. And as I mentioned, Brad joins us. Brad Kooima is with Kooima Kooima Varilek out of Sioux Center, Iowa. So let's start out there. Perception versus what is happening in this cattle complex.
I think that's a great question, Susan. Thanks again for having me on. I enjoy this a lot. Yeah, I can't imagine why anybody want to listen to this program. A face made for radio, right?
You and me both.
Yeah. Okay, so your comment about perception versus reality, I think, is spot on this week because of what's going on in the cash cattle market. And what I mean by that is expectations compared to what actually happens. It's no different than a crop report. Okay, we all knew what the guess was for what we thought the corn yield was going to be, and then it came in bigger than that. And you got and the bean deal. That's how you react. What real compared to what they expected, what the trader expected. Well, for 2 weeks in a row now, cash has been 2 to 3 lower per week. And if you asked anybody, me included, on Monday morning, what's cash going to be this week? Well, I suppose 1 to 2, maybe 2 to 3 lower again. It seems like we kind of lost our nerve in the feedlot, and basis traders are willing to take lower bids because futures are breaking. Roll back here a week. We'd had that Friday wreck and a Monday wreck on the stock market. Iran is, rattling sabers, and this from a week to now there's a lot of difference in the market. So what if it isn't 2 to 3 lower? I mean, the cash market, and I don't think it's going to be. Okay, I think it's going to. I'm stupid enough to make these wild guesses, right? I think cash is going to be closer to steady. So if it's steady, that's way different than the perception here, and you'll get a reaction out of futures. And I think that's part of what you're getting here already. I think that perhaps the Packers feeling like, oh shucks, I'm losing grip again on this giant beach ball that wants to, pop up out of the water. And again, I know we talked a little bit last time here about the similarities of this year to 2014. Broke the market 8 to 10% the last week of July until the middle of August. From a big price, and this is after a 3-year cow liquidation. That's what we did in 14, right? 11, 12, 13 big droughts. Same thing. Sound familiar? Big cow liquidation, have the same break. It's odd almost to the day, where we have the sell-off. And then come ripping back in October or in the 2014 deal to make new highs by $30. So I don't know. At the risk of, I don't want you guys to go nuts and do something that is poor risk management. But boy, the thing feels good to me, and it feels good to me because the perception that we've got a bunch of cattle here in the north is not accurate in my view. We do not have big cattle here in my backyard. This is a farmer-fed deal. Middle of August, it would be very common to have all kinds of 1,600-pound steers. We don't have any of those. None of those. Right. In fact, you'd have to look hard to find a 1,500-pound fat steer here right now. So we'll see. Let's see if we can dodge the black swan stuff. But look at the stock market where it's at compared to a week and a half ago. Box beef's up about $5 from where it was last Wednesday. I don't know. Things aren't so bad.
So before we jump into that lack of Armageddon, which I'm okay with, we do have a viewer question that came with the fact that he says, Brad always says the cattle, start and finish right there in Iowa. We know the north is very current. He said, my question to Brad is, are we going to have to import cattle from Oklahoma and Texas to be able to fill the needs that we need here?
You're starting to see, I would say short answer would be yes, but that'd be disappointing, right? You never get a short answer out of me. Sorry about that. But that is a characteristic of a bull market when you start to see that exporting of cattle from one region to the next. Without mentioning any names, that is widespreadly being done already with one packer, pulling cattle out of Kansas, especially out into Nebraska. I talked to somebody today that sold cattle last week that are going to Souderton, Pennsylvania. Okay. Now that'd be a hike. What happens usually, Susan, is that the fringe, if you want to call it the fringe areas, the cattle belt, if I can use that phrase, those are the ones that usually run out first, right? The farmer feeder usually is a little more stubborn. He's got cattle. Some of us are dumb enough to feed cattle regardless, it seems like, of what market conditions are. And then you have the corporate outfits in the South, which, I always contend that, have these deals. So they seem to be a little more impervious to maybe market fluctuations than some of us. They usually, there seems to be a core of supply there. So, yeah, my good friend Charlie Nevane was one that coined that phrase, that every market begins and ends in Iowa. And if I look around here, I would hope that every now and then it pays to have dirt on your boots. And I don't think that there's a big supply of cattle out here.
So what about this whole Armageddon thing? We know last week, I think everybody was checking their stock markets and also checking their grain prices and the cash that was happening there. It didn't come to fruition, like you mentioned, but as we see the ebb and flows in these market trade, how do we as cattle producers prepare ourselves?
Great question. C+ answer probably coming. That's why I want to be careful about, somebody going like, oh, that guy, sounded like he was bullish, right? So is it, did they put up the all clear sign on it? Was there going to be a recession? Of course not. Is there still risk out there? This is over my pay grade. I'm a cattle guy, but do you think you can really have a great economy with 8.5%, 9% interest? You can't find employees. You got layoffs, John Deere, et cetera, et cetera. Got an election, wild card, right? Iran, Israel, wild card. There's stuff out there, so how do you navigate that deal? Typically, I'm not much of an options guy personally, but I'm a broker. There's no high risk. I mean, I'm stupid with how much risk I'm willing to take, but the producer shouldn't be that stupid. So there are things like options. There are things like LRPs. There are, I do not let 2015 happen to you again. That's what that's the note I've got stuck up here. I mean, it's a reminder to me because I went through that deal. We had 14, we got into May of 15, and then we didn't have, it was no good for a year and a half. I mean, and really no good, so still use your head, get some stuff on there. Most of us can afford a small loss, do something like that. But if there was ever a time where the market had upside potential because of what the supply side situation looks like, it is now. And this whole notion that demand's so poor, give me a break. 20% of the exports, 20% of our beef movement last week was for exports. It's fine. Domestic demand, I don't know, boxes just rallied $5.50 or $5, but yeah, we're going into that Labor Day deal. But to say that they're advertising $10.99 for ribeyes here in my hometown, that's not too high, so I think the market's got some hope, but use your head, right?
All right, not to be the burr under your saddle. As we look at the latest that came out from the USDA yesterday, we're talking Tuesday, they said they're now going to start testing beef for avian influenza as well. But again, stressing to consumers in their comments, this is still safe to eat, but we're still going to test and spend the money.
I'm counting to 10. That's what my mother taught me to do. Okay. This is so epically stupid. It just about is hard to even comment on. Let's see. We can't find $500,000 to have a July inventory report, a report that would be critical to all of us producers, right? I mean, all the way down to the cow-calf guy. He's going to help make decisions by having a July inventory report. How many cows do we really have? How many heifers are we saving? But we can find money to test beef that's perfectly safe. We cook this stuff. I mean, I'm sorry, but the way they throw money around for stupid causes. It just defies my imagination. But I apologize if that offended somebody at the USDA, but this is a complete waste of time and a misuse of money. In my opinion, it could be much better spent on other things.
All right. Hopefully the market doesn't get all fluttered about it. And we
Well,
can
you
continue
test long
moving
enough
forward.
to look for something, you're going to probably find something, right? I mean, it's like that's the
Right.
frustration to me. But
All right, Brad, what's the best way for folks to get a hold of you guys?
712-722-0023 is the phone, or look us up on kkvtrading.com.
All right, that has been this week's Cattle Call. Quick reminder, commodity futures and options do involve a substantial risk of loss not suitable to all investors. And that's the Cattle Call on the Rural Radio Network.